On today's Big Money Bingo, we're going to cover 3 videos. 2 of them are from Mark Minervini, and the last one is trading psychology. So I guarantee we'll be giving away all kinds of fun prizes today. And the only way you're going to win is if you put hashtag outlier in the chat. So let's start with the first one here. Mark Minervini, is a sector rotation on the horizon?
There's a couple of things that concern me, and maybe not. Maybe we don't have an overall.
By the way, it is rare to see Mark on camera, like ultra rare, and he always wears white shirts.
Secular bear market, but certainly some type of rotation, maybe, and that's because. And I talked about this, many times before. If you show that first slide that has the real GDP, the Goldilocks scenario. Back in the pre-Reagan era, late 1980s, you can see there's these wide swings in real GDP, and then all of a sudden it gets real tight, and for decades and decades and decades, you can see there's been a lot.
For now, I'm going to expand this, trying to remember if he says any of these so we can see this better.
Lack of inflation and short-lived contractions and pretty tight areas, and you can see that those correspond with bull markets, and that's really the secret to sustaining a bull market, is to keep the growth where it's not too hot, it's not too cold. We've now termed it the Goldilocks economy. We're in that right now. We're in a real sweet spot, and maintaining that is what's important. And so what has changed? Somebody asked me on Twitter recently, is that something that has changed systemically? Is that something that it's methodology? What's changed is the government learned how to flatten the boom and bust cycle and print money, and it started with going off gold standards and things like that. And so far, it's been a good thing. We don't know what the ultimate price is going to be. Probably a depression at some point. But we've been printing money for quite a while. So the disturbance of that is what the institutions are really looking for, as far as if we get too hot, that's inflation, right? Then we've got to engineer a recession, and of course, if we go into recession, that's a contraction. Business isn't good. So right now we're in that sweet spot. We're still in a sweet spot here. The thing that I'm a little concerned about, and I heard maybe a few people, not too many people, talking about this, but in the 70s, Nixon put pressure on the Fed to lower rates to help get reelected, and Nixon won. But inflation doubled, and then it went up again and again until finally it was 14% by 1980. I remember, I think the prime rate was 18%.
A couple of questions coming from the chat. So, what is a sector rotation? So, sector rotation is what you see when stocks are starting to pull back. And I've told you this before. Does anybody remember? There's 2 sectors specifically that when the market's looking weak, these sectors start to look really, really strong. Tell me in the chat, because there's 2 I always like to mention. Like, when they start looking really strong, it's not good for the market. It's not good for the market. There are 2 of them. Put them in the chat. And then another question from Skinny Buff Guy. I'm assuming this was recorded on September 10th, 2025. At least that's what it looks like to me. One of them is staples. Yes, one of them is staples. The other one is not healthcare, not consumable, utilities. Exactly. Staples and utilities. When you start to see staples and utility stocks that are pushing really strong, really high, that is bad. That is a bad thing. That is a huge red flag. Something is not looking right. So there you go. We all learned something today. Pop quiz. Paul G absolutely nailed it, and so did several of you guys, like Rui and Driz over here. Outstanding work. Look at that. I'm so proud of you guys for learning and participating. All right, I don't know how much of our bingo card is going to get filled up by this video, but let's continue on.
A kid, but I remember it. I used to go with my mother and sit in lines for gas. So right now, I feel like the Trump situation.
I have to tell you a story. Mark told me this story. So for those of you who don't know, Mark Minervini is one of my direct mentors, and I've known him for years and years. And I remember talking to him when he figured out his VCP pattern, and he was telling me the story about when he was selling that pattern to institutions, and he got his first big paycheck, and he was showing it to his mom, And she looked at it and she was like, oh, I'm so proud of you. You made $1,500. And he's like, no, mom. Look at it again. And then she looks at it again. And she goes, oh, Mark, I'm so proud of you. You made $15,000. That's amazing. He's like, no, mom, you still haven't read it right. Look at it again. And she's like, oh my God, Mark, you made $150,000. And he's like, yeah, like this is a big deal. That was a really cool story to me. He mentioned his mom, so I wanted to share that story.
Situation is sort of rhyming with that era where there's this pressure on the Fed.
Well, Steve, so sector rotation is when we're moving out of other sectors into another, right? When the market's not doing well, we're rotating into staples and utilities. When the market is doing well, it could be rotating into tech stocks, or it could be rotating into industrials, or it could be rotating into communication sectors. Okay, that's what sector rotation means. You got this.
It seems like the minute there's any weakness whatsoever, they're talking about lowering rates now, and that may be right. Maybe this a preemptive strike. Maybe we are weakening, and that it. But again, losing independence from the Fed is a risk. And inflation. If you look, inflation is what we really want to avoid. Inflation is a tougher thing, and when you look back, you can see we print money, we QE, and we can bring the economy back. But the inflation era persisted for a long time, and we just had a spike in inflation from COVID. But I don't see inflation has come down that much, and things are pretty good. I mean, as far as there's still growth, so I don't see this emergency, to cut rates. I know everybody wants.
Has anybody found anything on the bingo card yet? Because I mean, granted, Mark's talking about more economic stuff than about trading, so we may not get anything on the bingo card in this video
To keep the market going. So I'm concerned about that. And when we take that in connection with, if you show, there's another chart, bring up the chart about the concentration. Yeah. Right now there's out of the 500 S&P 500 stocks.
I just want to put this out there. There was one point in time where I said there's 500 stocks in the S&P 500. I got all the trolls came out. And they're like, actually, there's 493. Actually, there's 517. Actually, there's shut up. Go jump off a bridge. If this dude who has made infinite amounts of money has said there's 500 stocks in the S&P 500, that doesn't mean it needs to be exactly to the number precisely. Let's not get ahead of ourselves, people. Okay, understand what is going on here instead of trying to dismantle all this stuff. You are getting not only free advice from a professional investor who's been doing this for 16 years, but you're also getting free advice from that professional investor who's been doing it for over 30 years. So you've got nearly 50 years of trading experience coming at you for free here on the OVTLYR channel. This is amazing. You have no idea how blessed this is.
Market cap, 40% of the market cap is in 10 names.
There's 590 companies in the S&P 500. Shut up, Steve.
10 names is controlling, is moving, is responsible for the movement of 40% of a 500 stock index. That's pretty.
Hold on. What did he just say?
The move 10 names. 10 names is controlling, is moving, is responsible for the movement of 40% of a 500 stock index.
That's the market cap weighting that we talk about. Let me go to the S&P 500 map real quick. Right. The 10 biggest names on here is responsible for 40% of the moves, according to Mark. So what does that mean? Market cap weighted indexes give greater movements to stocks like Microsoft, Nvidia, Apple, Google, Meta, Amazon, Tesla, than to something like Raytheon, to Boeing, to Philip Morris, to see if I can Sherwin-Williams, Goldman Sachs, Morgan Stanley, IBM, Intuit, right? All of those are small potatoes compared to the 10 that are moving the market. So you really do need to be aware that the market cap weighted index is such a huge portion. That's what this is measuring right here. The top 10 market cap stocks in the S&P 500 as a percent of the total S&P 500 market cap. So he's saying 40% of the move is due to those 10 stocks. This is crazy.
That's pretty extreme. All right, that is pretty extreme. And in the past, when this has happened, it didn't end very well. If you look at the percentage of stock ownership, we're up there. A Gallup poll just said we're up about 62%. Our calculation minus pension funds, I think you have that chart also, shows I think about 50%. So again, historically high ownership of stocks. Now this could persist for a while, and maybe it goes more. But again, long term, there's a lot of ownership and there's a lot of concentration. So what does that mean? Well, it could mean a complete bear market and washout and something secular, or because the small caps and the mid caps have drastically underperformed for so long that nobody believes it anymore. I mean, no, I don't think anybody believes that small caps are ever going to outperform the Amazons and the Netflix and the Palantirs. But at some point, there will be a major bull market in the small caps, and I think that's the next probably bull market in an area, in a big shift would be to smaller and mid cap stocks. So that's where I would be looking for emerging strength and a rotation, hopefully, as opposed to everything going down in a bear market. Shorter term, if you bring up the cycle work, September is
market cycle. We got market cycle. By the way, Mark is where I learned about the market cycle from.
the weakest month of the year. So, but you can see cycle work says we were supposed to be correcting back in July until October through the weakest month. We've kind of gone the opposite direction. If you can see the market's gone up, yeah, and the Dow and the S&P are tracking a little bit better. So maybe we get some pressure here, and then we get a strong end of the year rally. So now, with all that said, if stocks are breaking on a basis, I say Mark Minervini's bearish, calling for a big bear market. Not at all. I'm going to buy the breakouts and I'm going to stick with the stocks. If they're still working, then I'm in the market. I'm not going to go and make this big opinion and then ignore stocks that are breaking out of basis. So, and as long as we see that.
So he's also saying follow your plan. That's exactly what he's saying right there. He's also saying trade what you see. All right, we didn't get the most bingo dots on here, but that's okay because we still have 2 more videos to watch, right? The next one is coming from this channel, the Mint Code, and I need you, hang on, the Mint Code. I want you to go and subscribe, and I want, oh, look at that. There is a comment left by probably the most handsome guy you've seen on YouTube all day, from 10 Minute Trading. I immediately clicked to watch this. Mark is one of my friends and mentors. I'll definitely be sharing this one on my live stream. You rock, dude. Look at that. Keeping his promises. Who would have thought? Let's go watch this video here. Mark Minervini explains why compounding can destroy traders. Now, this is a tough concept here, because in order to get these crazy, amazing gains, you want to start stacking your capital, right? Let's say you go from a $50,000 account to a $70,000 account. Now you can start trading position sizes at that $70,000 level. And then you go from 70 to 100. You need to be trading position sizes at that $100,000 level, because now you can trade literally double the amount of size that you could at 50,000. But you have to be ready for that. You can't just jump right into it. In fact, I've had people ask me in the past when they want to move up in size. Maybe they got some inheritance, maybe they got whatever. I always tell them, like, layer it in. Go 10% a month. Get used to the size, because if you go from a $10,000 account, you get some inheritance or something, and you're up to a $100,000 account. Those losses, the first loss you take, and it's a $10,000 loss, you're gonna be like, deer in the headlights. But also the first $40,000 win you have, you're gonna be like, whoa, this is crazy. Yeah, it is a big deal to get used to trading at big size, but compounding can destroy traders. Now, thank you very much. Thank you very much. The real Bane, definitely not the monkey hammer donkey. He did say breakout for sure, 100%. But where is breakout on here? Where's breakout? There it is. There's breakout right there. Let's go.
Trades, same system, but when the dust settles, one walks away with $220,000 in his account, while the other is left with just $28,000. How can two people do the exact same thing and end up in completely opposite worlds? Here's the crazy part. This isn't just some made-up story. This exact scenario was explained by Mark Minervini in his book, and the outcome is nothing like what you'd expect. Let's break it down. So meet Larry and Stuart both start with $100,000. They make 24 trades together, literally side by side. 12 of those trades win big with plus 50% gains each. The other 12, painful, minus 40% losses. And just to make
But these are giant losses, like really, really, really painful giant losses. I've experienced a few of those this year. I've also experienced some 50% plus winners this year, right? You don't want your winning trades and losing trades to be within 10% of each other. You want your winning trades to be like twice as big as your losing trades.
make it fair, the trades alternate win, loss, win, loss, win, loss all the way through. So you'd expect them to finish in about the same place, right? No. Larry doubles his money. Stuart loses more than 70%. Same trades, two totally different outcomes. And now you're wondering, what the hell just happened? So here's the secret.
Okay, hang on. We need to go back and so we can see our bingo card here.
Larry never reinvested his profits. Every trade he bet the same fixed amount based on his starting account. Stuart, though, he reinvested every single time. He compounded his returns. That little difference is what changed everything. So let me show you how it plays out. Take $100,000. You win 50%, now you're at 150K. But the very next trade, you lose 40%.
Okay. This is one of those really important things as far as where's my I have my slide deck here. I need to go to my losses slide real quick. That slide at this one. Okay. So this is what we're trying to say here. A 10% loss requires 11% gain to get back to break even. A 20% loss requires a 25% gain to get back to break even. A 50% loss, which we're close to that point here at 40, requires a 100% gain to get back to break even. So that's really what's happening here. 50, 40, 50, 40, 50, 40, 50, 60, 45, 54, 40, 48, right? It really is all about keeping those losers small. It's not necessarily saying that you can't compound. It's that you want to keep your losers so much smaller than your winners. Here's my my return so far this year. Now you can see I'm in a decent drawdown, and I'm okay with that. I'm still up 38% for the year. I think I'll be okay. But look at the size of my average win versus my average loss. My average win is about 50% bigger than my average loss. So if we were to plug that into, where's that YouTube video at? If we plug that into here, it would be a completely different outcome, right? This is like 80% difference here. I'm sorry, 80% of 40 to 50% is about 80%. So it's $10,000, 10,000 over 40 gets you 25%. So 25% difference is what we're trying to say here. Versus 50% bigger. And that's where you need to be looking. You want to make your wins as big as you can and your losses as small as possible, because it really does take a huge gain to get back to break even. Those ads always startle me like, oh, what is this stuff?
Suddenly you're down to 90K. Even though the percentages look equal, you're actually worse off than when you started. Do that cycle 24 times and compounding just grinds the account lower and lower and lower. Meanwhile, Larry's fixed bet size keeps him steady. Boring maybe, but he finishes with 120% profit. And here's the lesson which I got taught by Mr. Minervini. Compounding isn't always your friend. It magnifies everything. If your system is smooth and consistent, compounding will make you rich. But if your system has wild swings and deep drawdowns, compounding can blow up your account. And that's how two traders, same traders with same systems, end up with completely opposite results. And here's something even more important. If your system has a negative expectancy, meaning
We talk about expectancy a lot. Yes, I'll give you consistency, and I'll give you consistency and discipline for sure. Thank you for that one. Alan, thank you for pointing that out. Rob, good to see you. Rob knows what to do. Hashtag outlier in the chat. Hang on, what was he saying?
the average, even more important, if your system has a negative
Expectancy. I am so big on expectancy because that is your average win, your average loss, and your win rate all put together into one final number. You want that number to be as big as possible. And that's where I feel incredibly blessed that we have Scott on our team. Scott, our quant, is helping us, all of the outliers, not just me, come up with a trading plan with the highest expectancy we possibly can. We have plan A nailed down. Now we're working on plan M, and plan M has over 200, this is unbelievable, 200% higher expectancy than plan A. We're not ready to reveal plan M just yet. Scott and I are going to meet literally right after this to work on it. But that's what I'm talking about, right? You want to have a plan in place where your expectancy is just off the charts. If your worst case scenario, we talk about this all the time. When your worst case scenario is that you're wildly profitable, you are doing it right. You are doing it right. And to Rick's point, in Vive, you got to journal this to figure out the problem. I agree completely. Journaling your trades will change everything for you.
Expectancy, meaning the average outcome of your wins and losses is tilted against you, then it doesn't matter how you size your trades. Non-compounding, compounding, or even step compounding, which I'm going to talk about in 1 second. Whichever type of compounding, they all eventually bleed out. The position sizing only decides how fast the bleeding happens. So the first step isn't just choosing the right compounding method, it's making sure your system actually has a positive edge. Now, you might be wondering, if compounding can be so dangerous, does that mean we should...
You know what? I'll give you high probability setups. With that edge, you should have a high probability setup by having that edge. I'll give you that one.
Avoid it completely? Not exactly. There's a smarter middle ground, something I like to call step compounding. Now here's how it works. Instead of compounding after every single trade, you wait until you hit a certain milestone. For example, Larry, our non-compounding hero, ends up with $220,000. Now, instead of still trading as if he has 100K, he resets his base to 220K. From here, he can start compounding again, but on this new solid foundation. This way, you're not exposed to wild swings trade after trade, but you still get the power of growth once you've earned it. And here's the beautiful part. This isn't just about the money, it's about life. I learned this the hard way back when I was trying to do everything at once. I thought I could just compound every win. Start a company, keep coding, trade, create content, scale it all at once, instantly, all together. But one setback after another hit me harder than I expected. Eventually, I had to shut my company down. I even gave up coding, something I thought I'd always continue, but I've given it a big pause just so I could form my base in investing and YouTube first. And honestly, that was the smartest thing I could have done, because step compounding isn't just a trading strategy. It's actually like a life strategy. Hit a milestone, lock it in, then level up when you have enough resources and time and capital, or both. That's how you grow without risking everything you've already built. Whether it's business, fitness, or relationships, you don't have to...
All right, fine. Everybody's talking about G5. I'll give you G5. My goodness, sounds like he's trying to reduce risk. All right, fine. We're not getting a lot of bingos today, and that's why we have 3 videos instead of just 1.
Scale every...
Hey, David says, I'm a noob to all this, and your show helps. Thanks, #OutLier. David, I want everybody in the chat to say, David, welcome, my friend. I am glad you are here. Everybody pay respects and say hi to David.
Little win right away. Build in steps. Protect your foundation. Because in life, just like in trading, it's not about how fast you rise. It's about how much of that rise you actually get to keep.
Man, we're striking out on bingos today. Don't worry. Chris has a plan. Let's go to the final one of the day. Trading psychology, why the best winners are actually losers. I think we'll get a lot on this one.
Thing I've ever done in my life, said Joe, a long-term subscriber on this channel, who's from...
I know I can't be the other one, but I can hear AI generated voices like that. And as soon as I do, I am instantly tune out. It doesn't matter what you have to say. If you can't take the time to record with your own voice and a microphone, I don't want to listen to you. That just irritates me so bad. But hopefully this has decent content. Hopefully this does.
Frustration I could feel leaping out on the screen I was reading his message on. Nothing else has been this exasperating. I've taken courses, spent hundreds of hours watching trading videos on YouTube, and followed people I only later learned were complete trading frauds. I've tried hundreds of
which I don't want to put a number on it, but first off, I want to say thank you for being here on this channel. As you know, I am an actual trader. I've made 2,400 videos at this point. You only probably found me as of 2025 or later because I didn't know how to play the YouTube game. I am a trader to the core, and I've been doing it for 16 years. During that process, I have made tons of money and I've lost tons of money, but I've made incredible lessons. I've learned incredible lessons in the meantime that I like to share with you. So call me a fraud all you want, but that's fine. I'll live to trade another day, no matter what.
Strategies and indicators looking for the holy grail, only to realize it doesn't exist. I've tried scalping, day trading, swing trading, all with little or no success. I'm not looking to become a millionaire overnight. I just want to succeed at trading so I don't need a full-time job to pay the bills, so I can have freedom of time. It might sound dramatic, but at 55 years old, it feels like I'm running out of time to make my dream a reality.
Okay. This is, I have to run this faster. It's too slow. But I do want to talk about a slight lesson right here. This guy talking about, I don't want to make $1 million overnight, but I'm 55, right? Running out of time. One of the things that I say, and I mean this from the bottom of my heart, you want to get rich quick. You absolutely want to get rich quick. Do I sound like a fake guru like they were talking about earlier? Absolutely. Absolutely, I sound like it. But think about it this way. To make $1 million over 20 years, you're making $50,000 a year. To make $1 million over 10 years, you're making $100,000 a year. It's the same $1 million, but your lifestyle is twice as great when you get 50,000 a year versus 100,000 a year, right? That's a big difference in lifestyle. Now condense that to 1 year. That is a giant leap forward in lifestyle that you can have. And we don't know how long God has given us to be on this earth. We don't know, right? In fact, I know somebody who passed away not too long ago at 39 years old. I am 39 years old. And I'm looking at this situation. I'm like, good gravy. I cannot believe that this person passed away at such a young age. And I fully believe you want to get rich as fast as possible so you can enjoy it. Your children can enjoy it. Your parents can enjoy it. Everybody around you gets to, in fact, but that's how I feel. I feel like I'm a very generous person because I love to give to those who I love. And if you are Scrooge McDuck and you like to swim around your gold coins, you do you. I don't care. But you can swim around your gold coins, or you can spoil those people that you love that much faster, that much sooner, and that much more by trying to get rich as fast as possible versus, making $1 million or $1 over 1 million years. Exactly.
I'm very good at my day job, but I've realized that what makes me successful at work doesn't translate to trading success. I consider myself a pragmatic person, but I just can't figure this trading thing out. Any help or guidance would be greatly appreciated. Frustration, hope, frustration again. Bigger hope, bigger frustration again. This is a common cycle of the typical trading journey.
Baron remembers when I was on Benzinga a few years back. Oh, thanks, Baron. Yeah, I've been doing this for a minute, right? And 90% of what I've been saying is the same thing for years because it's timeless, right? Small things have changed along the way, but overall timeless principles always work. That's the great part.
All heard the stories of overnight trading success somewhere, but the reality of trading is far less glamorous. Many traders like Joe experience immense frustration on this journey.
Many traders like Joe experience immense frustrations. Joe is all kinds of frustrated this morning.
They've poured hundreds of hours into learning, chasing strategies, and following trading gurus. Another channel subscriber, we'll call him Mark, wrote to me about how he also wrestled with the question of whether trading was a viable path for him. Mark spent years experimenting with different styles, from Forex to synthetic indices, but consistent profits remained elusive. In his own words, he wrote, "For the first year, I learned about Forex from YouTube and baby vips. In my second year, I transitioned to synthetic indices because I preferred a market not affected by news, and also because it required a small starting capital. I used demo accounts the whole time, but haven't been able to make consistent profit. In my third year, I returned to Forex when I heard of prop firms. Then, I learned a trend strategy from Adam Koo's videos. However,
okay, I'll give you follow trend. This video is not. I almost feel like this is I might crash out on this video. I might rage quit this. We'll see. But I feel it coming.
At the end of my third year, I decided to rewatch the learning videos. This rewatch helped me realize my mistake in applying the trend strategy. I had been trading the strategy wrongly the whole year. I didn't learn well enough before trying it on demo accounts. This led to me failing 2 prop accounts due to exceeding the maximum overall loss. Interestingly, I did have the discipline to stick to the bad strategy even during the losing periods. After realizing my mistake, I backtested the entire year of 2023 and made some modifications to the strategy. This backtest resulted in a 43% win rate and a 55% total return.
Okay. I don't have backtesting on here, but I'll give you entry signals and exit signals because that's what you learn by backtesting. By the way, I love backtesting. Oh my good gravy. I can sit there and I can work on backtesting for hours and 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 hours, and I have the most fun doing it. Other people probably would lose their mind.
It has been 2 months since the backtest. In the first month, December, I made 0.6%. In January, I made 0.3%. February is almost over, and I'm currently down about 4%, all on demo accounts. Now I'm considering trying a prop account again, but I'm unsure. Do I need more experience on demo? Do I need to further develop the strategy, or perhaps work on my trading psychology? From these traders' stories, a familiar theme emerges, and I'm sure it's one that resonates with many of us. During the early days of my trading journey, I also questioned if this path was truly right for me. But there's a silver lining. No matter the obstacle, the human spirit endures. We all have the capacity to persevere. As proof of this statement, we can see that Mark identified a flaw in his approach and backtested a modified strategy with promising results.
Fine, I'll give you 05. Jeez.
While Joe is actively seeking ways to improve his skill set. Their stories might not sound like it right now, but this is the spirit of a true trader. The path to trading success is rarely linear, and their stories are a reminder that setbacks and doubt are normal. In this video, I'll share 5 crucial trading psychology mindsets.
Great. 4.5 minutes later, and you finally get to the point. Okay.
You need to focus on to fast-track your trading journey from a losing trader to a winning trader. These are surprising trading psychological tricks that reveals why losses are actually a stepping stone to success. 1. Losers are the actual winners. David stormed out, slamming the brokerage door. Sarah, a seasoned trader, saw a familiar scene, her own past. Back then, losses felt like a vicious dog bite, leaving her defeated. But Sarah, unlike David, didn't quit. She treated losses as lessons. She studied, analyzed, and learned from mentors. It was humbling, but with each loss, she chipped away at her ignorance.
No, I agree with that. I wish it had started here. This is significantly better so far. I agree with this. In fact, that is something we here did at OVTLYR this year, right? We had a great first half of the year, and then we hit a losing streak, right? And so during that time, we sat in cash, we're not effing up our account, and we took a step back and we said, okay, with all the available data that we have here, where can we find improvements? Where can we find enhancements? And we have found unbelievable enhancements, unbelievable gains because we backtested, because we had those losing trades that gave us the motivation to look for something new and better. And we have an unbelievable staff that we are all working together with one goal. Our one goal is to make masters of the universe money, right? I know that sounds crazy, but I actually heard that term from Jerry Parker, who is the most like country, relaxed, chill dude ever, one of the original turtle traders. And he said, I want to make masters of the universe money. And I totally agree with him. I also want to make masters of the universe money. And so does Dr. J. By the way, I got those emails. Thanks, Dr. J. And because of that, you have to have a constant learning approach. You can never just sit there and say, okay, I figured it out. Let's do this, right? It's never going to work like that. I5. What do you mean I5, Carol Catherine? Did we haven't said wait in cash yet, have we? I'll give you that one. Architect Ray Ray has the power. He has the power. That's right.
Now Sarah approached David. Losses hurt, she said gently, but they can teach you the most. David scoffed. Easy for you to say. Sarah smiled. Losses are part of the game. The difference is how you handle them. You wouldn't expect to become a chef without burning and messing up a few.
Oh, snap. We do have a bingo. I totally missed it. Hang on. I got to get my bullhorn. You know the deal. Ugh. Hey, wait for it. There we go.
We got a bingo on row 5. Bingo on row 5.
Geez, it took us 3 videos to get to our first bingo today. That is an unusually long time to get there. All right, let's see how many bingos we can get. You guys played me. You played me. I didn't even see it coming.
Meals. Right. David considered this. Maybe losses weren't the end, but a chance to learn. Learn from your mistakes, Sarah concluded. Adjust your approach, come back stronger. That's how you turn losses into wins. Losing isn't the opposite of winning in trading. It's part of the process. So
I agree. In fact, one of the things that I talk about as well is that when you're making your trading plan, you need to build in losers. I know that sounds great. What do you mean you need to build in losers, Chris? You're never going to have a 100% win rate. If I could give you a 100% win rate, my name would be Jesus Christ and you would be perfect. My name is not Jesus Christ and none of us are perfect, okay? Because of that, you must build into your trading strategy losers. You must. If you don't build in losers, you're not going to be a winner. Just going to happen that way, all right?
embrace the losses, learn from them, and adapt. That's the path to true trading victory. The next losing trade might be the start of your greatest learning experience. Number 2, we all got into trading for the wrong reasons. Let's be honest, most people in the world of trading loves to showcase fancy cars and dream vacations. It's no wonder we get caught up in the idea of overnight success and financial freedom. But here's the secret. Trading can be much more fulfilling when you have the right reasons. Forget the get-rich-quick schemes. They're just empty promises. The real rewards of trading lie in the challenge and the journey. Here's why. 1. It's a mental workout. Trading keeps your mind sharp as you learn, analyze, and strategize. It's a constant learning process that pushes you to grow. 2. It helps you take control of your finances. Trading empowers you to make your own investment decisions and shape your financial future. 3. The thrill of the climb. The path to success may not be overnight, but steady progress and continuous learning can be incredibly rewarding. 4. It forces you to find your deeper why. Before you can be successful in trading, the markets exposes who you truly are and forces you to confront your inner demons. So it's advisable that before you jump in again, take a moment to reflect on what truly draws you to trading. Do you do it as a way to get rich quick? Are you truly fascinated by the complexity of the markets? Are you truly fascinated by the idea of developing a valuable skill that will feed you for life? Once you identify your why, you can create a realistic plan and build the discipline needed for long-term success. Remember, consistent effort, a healthy dose of reality, and the right motivations are the keys to unlocking your true trading potential. So ditch the Lamborghini dreams, focus on the journey of learning and growth, and who knows, financial freedom might just follow as a happy consequence. 3. It is more than just trading financial assets. Trading goes far beyond simply buying and selling financial assets. It's a multifaceted journey that hones valuable skills and cultivates a unique mindset. Trading forces you to develop into someone that's more disciplined, more logical, more in control than you were before you started. You'll learn to analyze information objectively.
Okay, so you guys tell me in the chat, when you have seen me and I have a losing trade, what do I act like? It's a very, and I'm not trying to put myself on a pedestal, not at all, but I do try to lead by example. When you see that I've got a losing trade, and in fact, we could go on YouTube and we could watch the video. What do I look like, right? Do I look upset? Do I look frustrated? Do I look animated? Do I look like things are going wrong? Or do I look chill, cool as a cucumber, right? Cool as a cucumber, right? It's normal to lose. Like, it looked like you learned something. Yeah. The thing is that you must build in losers. Now, I've been saying this a lot more, and I'm going to continue to push this narrative. You need to treat your account as if you are a fund manager, right? Imagine you're Ray Dalio. Imagine you are Warren Buffett. Imagine you're whomever, and you are you're putting trades on, right? Do you really think Warren Buffett, Ray Dalio, Jim Simons, whomever, are going to be looking at their wins and losses? And do you think that they're going to be jumping up and down and screaming in excitement when they have a win? Or do you think they're going to be hanging their head down low? They're going to be crying. They're going to be all butthurt because they had a loss? No, it's literally part of the game. You must understand that you will win trades, you will lose trades. How you act on both of those honestly shouldn't be any different. It should just be part of the game. Imagine that you play football, okay? And my 10-year-old son Elliot's playing football, and some plays they run and they make 5 yards. Some plays they get us, they get sacked and they lose 5 yards, right? And imagine your favorite sports team. Do you think that every time that they get a couple yards, they jump up and down and freak out? And they're like, "Oh my God, we got some yards!" Or anytime that they lose some yards or even get a penalty, they're like, "Oh my God, we lost some yards." No, it's just part of the game. And once you develop that that emotional control over, okay, I have a win, okay, I have a loss, okay, neither one is going to make that big of an impact to my life. That will completely change how you act as a trader. Completely change how you act as a trader. And you must be keeping the emotion out of the game. You have to. You have to.
Make calculated decisions, and stay composed during market fluctuations. These skills translate beautifully to other aspects of life, from business ventures to personal finance management. It's a journey of self-discovery. Trading forces you to confront your strengths.
I was angry at the trolls. That's true. I was very angry at the trolls. Chris got his butt hurt because these people just don't understand that losers are part of the game, right? You can still have a 38% gain on the year and have an incredible year. And what's the S&P 500 going to do? That's going to take it like 4 years to get to that point, right? Even though I'm in a drawdown, who cares? I'm still up great for the year.
Strengths and weaknesses. You'll learn how you react to losses, how you handle risk, and how patient you can be. This self-awareness is invaluable in any pursuit, helping you identify areas for improvement and build a more resilient mindset. And it is a continuous learning process. The markets are constantly evolving, and successful traders are lifelong learners. You'll be exposed to new strategies, economic data, and market trends. This constant thirst for knowledge will benefit you not only in trading, but also in any field that requires staying ahead of the curve. Number 4, consistency is not spoken about enough. Consistency in trading is a fundamental principle that often gets overshadowed by the allure of quick
We've already got consistency. It ain't going to happen. I'm not going to give it to you again.
wins and dramatic results. Each successful trade is like laying a brick. You might have a fantastic day and lay down 10 bricks at once when you go on a profitable streak. But if the next day you get discouraged and skip laying any bricks, or worse, tear down a few you already laid when you lose trades based on emotional decisions, your progress will be slow and erratic. Consistent traders are like bricklayers who show up every day and methodically lay their bricks. They might not have explosive growth every day, but over time, their wall steadily rises. They understand that there will be good days and bad days, but their focus remains on following their strategy and managing risk consistently. Let's use an example. Trader A makes 10% profit one day, then loses 5% the next, followed by a 2% gain, only to lose 6% again. This trader lacks consistency and might be making decisions based on emotions or short-term opportunities. Trader B makes a consistent 3% profit every month. Over a year,
That's never going to happen, by the way. This is way more realistic. And why do I say that's more realistic? Because we don't know when the market's going to pay us. And I'm going to rage quit this video. I'm not rage quitting. I'm chill. I'm chill. I promise I'll be chill today. We're going to quit this video. But we don't know when the market's going to pay us. Now, I want to use a couple examples from my personal experience. So let me go to my 2024 results real quick. I'll pull this up. And in last year, 2024, Chris made 91.37%. No gains until May. Nothing in June, 12% in July, 30% in August, 7.99 in September, 6.9 in October, and -8 in November. Okay. And you can see how it went for me last year. Now, looking at this, you would say, well, if we zoomed in on this, you'd say, well, why weren't you trading then? What went wrong? In fact, I got a comment one day. I was like, well, what went wrong in November? Nothing went wrong. Follow my plan. Do you not think that 91.37% is good enough? Right? That is how it works. We don't know when we're going to get paid. And for someone to say you need consistency, they are 100% wrong. They don't understand how the game is played. And let's go to my 2025 results so far this year. Now, I definitely have a drawdown, and I'm not happy about it, but it's part of the game. We'll let that load in for a moment. It needs Google Finance to update. But, I've had some good months, and I've had a couple bad months. And I took that those bad months were an opportunity to improve my trading plan. And now I have a trading plan that is literally 100, I don't mean this to be like it's 100% better. I mean, it's literally 100% better, more than 100% better. And that's just plan A. Plan M is another 200% better than plan A. So I may be in a drawdown, but that's fine. That is part of the game because we don't know when the market's going to pay us. And we cannot tell the market that we want to get paid, which is why I really poo-poo the idea of saying I want to be a day trader, because day trading puts a lot of pressure on you, right? Oh, I need to make, we'll use round numbers. I need to make $10,000 a month. Okay. A lot of people, that's a big number. And when they say I want to make $10,000 a month, but they've only made $250 for the month, that then turns into a lot of pressure. I can't pay my bills unless I make $10,000 this month. And then it's like, well, okay, I've got some problems here. If I can't pay my bills, then I've got to trade even harder. And if you trade even harder, that means that you are more than likely going to be taking trades that you shouldn't be taking in the first place. And it, honest to goodness, can absolutely destroy you by putting that pressure, as in, I need to get paid every month. My personal opinion is make as much money as you possibly can. Figure out what you need to live on for a quarter at a time. Take that out of your account and live on that for the quarter. That way, you can compound as much as you can in those 90 days, pull out what you need for the quarter, do it again, do it again, do it again, do it again. Okay? That relieves the pressure of I need to make as much money right now as I possibly can. No. What you need to do is sit in cash and not F up your portfolio unless you have everything set up for you. What you need to do is put #outlier in the chat so you can win. What you need to do is tell me, where did I miss some bingos? Where did I miss some bingos? Let's see. We need to make sure that we are not telling the market where we're going to get paid. Where are we going to make sure we don't tell the market where we're going to get paid? How about, you need to wait for confirmation. You need to wait for confirmation for sure. Absolutely not. And you need to make sure that you aren't predicting anything. In fact, Dr. J, I agree with you. You need to make sure that you don't forget or don't predict anything. Oh my goodness. Who would have predicted a new bingo on the board?
We have a double bingo. Now we are on row 4 and row 5 for the bingos.
All right. All right. So, I mean, the very last thing that I would tell you, right? If you want to be successful in the markets is like, and what frustrates me is when I see people who have no idea what they're talking about telling you that every time the market pulls back is an opportunity to get in at a better price. Every time the market pulls back, that you've got to have the cash on the sidelines to buy the dip. Buy the dip. Oh, there we go. Exactly. By buying the dip. Oh, perfect. Yes, definitely don't buy the. Oh no, another bingo.
We have 3 bingos on the board. 3 bingos on the board for 3 videos today. That's all I'm going to give you. I'm not going to give you any more.
Bro, this has been kind of brutal. These videos did not turn out as great as I hoped that they would. But you know what's going to turn out great is when you put #outlier in the chat, you have the chance to win big money bingo right now. And the first winner is, while that's running, let me prep my email to April. She will take care of you. It is King Arthur. Dude, congratulations, King Arthur. I am super stoked. King Arthur is our first winner of the day. Let me start my email over to April. April, bingo winners. All right, King Arthur is our first winner. Let's see what King Arthur's won. Let's see what King Arthur has won. Here we go. King Arthur has won a sit in cash and don't F up koozie. Very cool. Congratulations to you, King Arthur. Sit in cash and don't F up koozie. Outstanding work. And for all of our winners, be sure that you email in so April will know where to send this, support@outlier.com. Let's go and see who the next winner is going to be. Draw again. We got 3 winners to give out today. Don't forget, support@outlier.com to claim your prize. King Arthur says, yay, let's go. Wild Stimpy Norwood, hailing from the from southern Oklahoma, the Lake Texoma region. Wild Stimpy Norwood is our second winner of the day. Let's see what the Wild Stimpy Norwood won today. Let's see what Wild Stimpy Norwood won. Isn't this so much more fun than just giving away $10 Amazon gift cards? I love it. I love it. Wild Stimpy Norwood gets a Outlier Flag t-shirt. Congratulations to you, Wild Stimpy Norwood. All right, Outlier Flag t-shirt. And our third and final winner of the day, be sure that you email in at support@outlier.com. Our third and final winner of the day is Moneybags Ashley. That took forever. Moneybags Ashley for the win. Congratulations to you, Moneybags Ashley. And let's see what Moneybags Ashley has won. Let's see. Let's see what Moneybags Ashley has won. $10 Outlier merch credit. And like I said earlier on in the video, we got all kinds of stuff for basically $10 or less, right? We're selling everything we can at the absolute lowest possible price. And be sure that you put in Outlier at checkout to get 10% off. So $10 merch credit for Moneybags Ashley. So congratulations to all of our winners today, King Arthur, Wild Stimpy Norwood, and Moneybags Ashley. It is an outstanding opportunity that I get to hang out with you every single day. I love doing this with you, and I hope that this is useful. Of course, these videos weren't the most captivating ones, and that's okay. We'll try and make some more exciting ones next time. So you guys have a fantastic day, and if you're ready to save time, make money, and start winning with less risk, click one of these two videos, and we will talk soon.